For the first half of this year in 2023, we heard all different sorts of predictions regarding the housing market. We heard that mortgage interest rates were going to be down to 5.5% by the end of the year. We heard that home prices were going to rise by anywhere between 5 and 6% by the end of the year, according to Zillow and Goldman Sachs. We also heard that this is also the bottom of the market and it's all going to be up from here. Well, it all turns out that none of that's actually true. And I like calling these things out when I see it because, you see these predictions from these companies and real estate experts earlier in the year, and as the year progresses, now that it's almost over, we can see that none of that stuff has actually happened, and most of it is actually the opposite, especially when it comes to mortgage rates. But Goldman Sachs was one of the predictors earlier in the year that said we're going to end this year like 6% up. And I remember talking about this back in probably the late spring of 2023, that this was going to be the case. Even though the housing market was already on the downturn then, but then it started picking back up due to the spring and summer selling season, which is normal. Now they're talking about how home prices are going to fall for the rest of the year due to the high mortgage rates and low supply of homes. That's kind of a funny way to put it, considering one of the main reasons we have such high prices as we still do is because the supply is too low. And yet they're saying this is one of the reasons that home prices are going to fall. It really doesn't make any sense. So as I read these things, I just have to mention here on the channel of how bogus all this sounds. Here's another thing that they say. The sharpest declines in housing activity and prices are now long behind us. The recent jump in mortgage rates and the prospect that they are likely to remain elevated for the foreseeable future present headwinds to the economy's most interest rate sensitive sector. Now, first of all, how do they know that the worst of it's behind us? The declines in housing activity and prices has already bottomed and the sharpest declines are now behind us. How do they know that, guys? Oh, wait a second, they don't. Because they actually don't know anything because they keep spouting all this nonsense, quarter after quarter, or however every couple of months we get a report from them talking about what they think is going to happen, and none of it's ever right. Now, I'm not sitting here on YouTube telling you guys that I'm always right about everything, because I'm definitely not. Okay, one thing I'll easily admit that I was wrong about is the timing of this whole economic collapse / housing crash situation, because I thought by now we would already be more in the thick of it than we really are. But I underestimated the Fed and the federal government's ability to prolong this recession, okay? But I do think it's still coming, but I think it's being delayed on purpose at this point, mostly due to elections. And I'm not trying to tout my own horn. I'm just saying that, I'm paying attention to what everybody else is saying and using my own intuition as well as past experience and what happened with real estate to kind of gauge where I think things are going next. And yet you have big banks like Goldman Sachs and these companies like Zillow making all these wild predictions that sound outrageous and don't actually happen. Now, obviously, I agree with Goldman Sachs that home prices are likely to continue going down for the rest of this year, but they think it's going to end at 3.4% higher than it was a year ago by the end of this year, according to the Case-Shiller Home Price Index. Another thing I actually kind of agree with Goldman Sachs on here is they think that next year home prices will only rise at most by 1.3%. Finally, a more modest prediction. We don't know if home prices will go up at all next year. It could very well go negative. And if it does go up at all, it won't be by much, which kind of is what this report is saying. And that's pretty much the page that everybody needs to be on here, guys. With these 8%, 8.5% mortgage rates right now, nobody can expect prices to really climb from here on out. We might see that small bump during the spring hot selling season, but I don't see, a meaningful jump in home prices next year, except for in some maybe undervalued markets where there's still a lot of room to grow. And when it comes to Goldman Sachs mortgage rate predictions, they think that we're not going to see mortgage rates dip below 7%, at least until the end of next year. And who knows, guys? Who knows what's going to happen with these mortgage rates? Do I expect them to go down anytime soon? No, I don't. Especially now that we have inflation starting to creep back up, and now we have this war happening over in Israel. Who knows how much money we're going to end up throwing at that. We've already been helping Ukraine, sending a lot of money over there. I doubt we're going to see a meaningful reduction in interest rates anytime soon. And we also recently saw the 10-year Treasury get to 5%, which means that we're likely to continue seeing these mortgage rates inch higher and higher. And here's the crazy thing. If you're a well-qualified borrower right now, you're lucky to get an 8% rate. You might be able to get 7 or even somewhere in the 6s with a buy down, or if you purchase points. But for the average borrower who only has like a 620 credit score or something like that, is not in the greatest financial shape, you're gonna be well in the 9s by now. And by the way, we're walking over in North Miami today. Now here we have a house that's been tossed around like a hot potato, currently listed at $3.45 million, and it has a long history of being sold, going all the way back to 1983, from anywhere between 150 grand all the way up to the most recent sale in 2021 of 1.85 million. And the current owner has been trying to sell this house since March of 2022 and have had the place on and off pending since then, but still no luck. And the property tax bill here is a cool $30,000 a year. Now all this kind of leads me into the next thing that I've been wanting to talk about for a little while. I don't know how long ago, but maybe a month or two ago, one of my viewers asked in the comments, can you make a video about why you should just hang on to your cash and wait right now? And while I don't think it really makes sense for me to make an entire video about that, this is probably a good time for me to give some of my thoughts on this because of where things are going right now. Because we just looked at this report of Goldman Sachs, basically their revised prediction going from 6% up year over year to 3%, that's basically half. You know, where they think home prices are going to end up for the year got cut in half due to things not going as well as everybody thinks that it's going. Right now, besides that, we have these wars going on, we have a volatile stock market, but in the meantime, you can sit there and make 5.5%, you know, in a CD or a treasury bill with basically no risk at this moment. Obviously, some people might still think that there's risk with the banking system, and there's legitimate concern with that, of course, but US treasuries have long been like the safest asset you can own. And a lot of people are willing to stand by that still. In an environment like this, where you can get a 5.5% return risk-free, I don't think there's really any better alternative. I'm not sitting here being a treasury fanboy or anything like that. I'm just looking at this from a real world perspective and thinking, what else can you do right now that really makes any sense? Because you can go try to find a real estate investment, but in order to make it cash flow, you're most likely going to have to pay cash. And so that means you need to have some cash laying around, some serious cash, especially at today's prices. And even after all your expenses and you paid cash for the property, I'm willing to bet that you're probably going to have a hard time getting a 5.5% return on investment on that property after all is said and done. Stock market is super risky, especially with the way things have been going recently. Today it's up, tomorrow it's down. And you know, a lot of the experts are claiming that we're on track to have a 50% drop in the stock market. So what else is left? Well, the only thing to me that's left is gold and silver. I've talked about that on the channel here many times. But the thing is, gold and silver is more just like to protect your current wealth and to make sure your savings don't get eroded by inflation. It's not an investment. It's not something that's going to give you a 5.5% return on an annualized basis. Can you make a return on gold if it appreciates? Yeah, of course you can, but that's not really the reason that you should buy it. That's why I think all of these reasons are pretty good reasons to just hang on to your cash right now and collect that 5.5% return, guys. Like, you really have nothing to lose by doing that, number one. And with how volatile everything is out there, I think it's probably just like the best and safest move at the moment, given what all the other alternative options are. It's not the most exciting thing in the world to do, of course, but it's safe and you can still make a decent return on your money, especially if you're sitting on a significant amount of cash. So to me, I just feel like it doesn't hurt to wait a little bit longer right now, see what sort of opportunities pan out over the next couple of years, because since we know these interest rates aren't going down anytime soon, you could even lock in 10-year treasury bills right now for 5%. You know, that's pretty good. So personally, I mean, that's what I'm doing, setting money aside, collecting that interest, and just waiting to see what's gonna happen. Because I've pretty much given up looking at real estate in terms of an investment right now. because you really just can't find anything that makes meaningful sense. Unless you, like I said, you pay cash, and even then, you're lucky to be getting a 5.5% return. Now, I saw another interesting story today talking about 3 reasons you should never invest in a foreclosure home and 2 reasons that you actually should. And like I covered about a week or 2 ago, in the 3rd quarter of 2023, the amount of foreclosures that are in the wheelhouse right now have basically surged. It went up 28%, in fact, and you have about 125,000 foreclosures in the pipeline currently across the US, and that's according to the data firm Adam. So let's take a look at some of these reasons for and against investing in a foreclosure. Now, obviously, the number one thing is most of the time foreclosures come in pretty bad shape. People don't really take care of them. Not only do they not take care of them, sometimes people will actually intentionally vandalize the property. You know, you heard all kinds of stories about people clogging sewer pipes and drains with concrete and ripping out all of the plumbing and the copper and the wiring throughout the house just out of spite, and all this crazy stuff that can actually happen. And the problem is, most of the time when you buy a foreclosure, you won't get to go inside and look at it beforehand to determine what kind of condition it's in. So you're taking on a pretty big risk by jumping into this situation, not really knowing the full scope of work that might need to be done to the house. Not only that, but you could even encounter a situation where there has squatters in there and nobody even knew about it because the place has just been sitting there empty for who knows how long, and that can be a whole new problem to deal with. So I would say that's probably one of the best reasons not to buy a foreclosure for sure, is if you're not willing to take the risk of what kind of condition the property could potentially be in. Another thing is it can be very difficult to get a loan on a foreclosure property due to the fact that because these properties are usually in such poor condition, a lot of times they won't give you a loan for it. You know, if there's no working bathroom or functioning kitchen in the property, they won't give you the loan, guys. Now, Fannie Mae has the Home Path program where they sell foreclosures on the Home Path website, and they have their own financing geared towards helping you purchase one of these properties. But if it's outside that system, it can be pretty difficult to actually get a loan for a foreclosure. And when I first started in real estate back in 2009, I saw a lot of people buying foreclosures, and 9 times out of 10, it was a cash deal or a hard money loan in order to get the property, because traditional lenders wouldn't touch it. Especially then, you know, the banking system wasn't giving loans, kind of like what's starting to happen right now. Another big problem with foreclosure properties is they can have liens attached to them that you also don't know about. Now, you can always get a title search done to make sure that there are no liens attached to it. And supposedly, liens from mechanics or second mortgages are supposed to be removed in a foreclosure situation, but the ones that are filed by government agencies can still linger on. And so essentially you have to be willing to take that risk as well, that you ran a thorough title search, and as far as you know, there's going to be no liens on the property after you close, because if there's something that was missed, you're going to be on the hook for it later on. And it's perfectly legal for this to happen, by the way. So anybody who thinks, oh, this can't happen to you if you buy a foreclosure, it absolutely can. But there are a couple of positives about buying a foreclosure. And obviously the number one thing is it comes at a much lower sales price. Although, to be quite honest with you guys, a lot of the foreclosures I'm seeing right now, at least at this stage in the market, are not really priced that much below, you know, other homes in the area. We're talking maybe 10% less at best, you know, but a lot of times they're priced at fair market value still, because there's not that many of them, so they're treating them as regular listings, although they're not, because of all the problems we just described. So you have to be very careful if you come across a foreclosure and it's priced the same as the house across the street that's been remodeled. So that's a totally different type of listing, and you could be on the hook for a lot of different problems with a property like that. And then if you see one that's a lot cheaper, like the one that we saw over in Macon, Georgia, where the price of the home was literally $100,000 under what a typical home goes for in the area, that's also a big red flag, because even though you're getting it cheaper, it means that there probably are liens attached to the property. It probably means that it does need a full renovation and a lot of other things that you're just not sure about. But the best thing about getting into foreclosure, if you can find the right deal, is you're going to build equity a lot faster, especially if you get the property for a significantly lower price than other neighborhood properties, and you did a thorough title search, you didn't capture the property with any liens, and the property actually needed minimal amounts of work. That can actually be one of the best arguments for buying a foreclosure, because you'll immediately get that extra equity in the property once it's kind of up to par to the other homes in the area, if you're willing to put in the legwork and potentially the elbow grease to get the property in that condition. So it's something that I wanted to just cover here. I saw this is a pretty good story about it, and it's pretty accurate, unlike most of the other stories that we run into. It's just something for people to have on their radar if you're thinking, oh, well, I can't wait, there's going to be this whole wave of foreclosures coming in the future, and then I'm just going to get in at pennies on the dollar with real estate, which is possible, guys, but it comes with its set of risks, okay? And let me tell you, I've seen my fair share of foreclosures since I started during the height of the housing crash back in 2009, and most of these properties were in pretty bad condition. There was a few of them that I would say could pass for almost normal condition, maybe just a little more banged up around the edges, but the vast majority of them needed far more work than the average home did. And you know, you get what you pay for. And there's a reason why those properties are priced low. You know, one factor was because we had too many homes on the market in general, which made prices plummet. But then when you have so many homes for sale like that, they have to lower the price even further to make this property stand out in its condition. So something else to keep in mind as we start to see more foreclosures hit the market little by little. But you have to take the good with the bad, because I saw this story and thought it was great talking about the foreclosures, and then I saw another one from CBS News talking about the 6 easy strategies to build wealth with a HELOC. Now, first of all, I have to call out CBS News right before we even get into this, because last time I talked about them, I was in California, and I remember it was probably something with a HELOC as well. These guys write these stories to make a commission. Just in case you didn't know that, that's their sole reasoning for wanting to do this. If you're somebody that reads this story and says, oh, maybe I should get a HELOC, and you go and apply for one by using their link, you're going to give CBS News a commission. So it's in their best interest if you go ahead and get a HELOC on your home. They could care less what happens to you after you get one. But anyways, let's look at some of these reasons why using a HELOC, or how using a HELOC can actually help you build wealth. First one they say is because of home improvements. By investing in renovations and upgrades that increase your home's value, you are effectively building wealth in the long run. A higher home value means greater equity. Now, this is kind of true, but not always. This is assuming, number one, that home prices don't absolutely plummet in your area during this coming recession. And it also means that, you know, you remodeled the property or renovated in a way that is appealing to the average buyer and isn't some crazy looking stuff. You know, some people renovate and they think, oh, this house looks great, or I love the way I did this, but their taste is actually horrible and most people don't like it. So that can actually backfire tremendously if you don't renovate according to what most people would like to see. Here's another big one that's basically just a lie, which is debt consolidation, okay? By paying off high interest credit cards and personal loans, you can reduce your overall interest payments and save money in the long term. Oh yeah, that's actually true, except for one problem. If you are drowning in debt, then likely you might have a spending problem or a discipline problem when it comes to figuring out how to manage your money. And if you don't get that figured out before consolidating all on a HELOC, you can be in big trouble, because all that's going to do is free up more available credit for you and put you in a position where you think, hey, I guess I can go out and spend more now that my credit card balances are freed up, or I guess I can go get another personal loan now that that's freed up. No, guys, you have to learn how to manage the money if you're going to do this. Also, I really wouldn't want the TV that I bought on Black Friday or that old set of slippers sitting in the closet being attached to a potential lien on my home because I'm not paying my bills. Because in case you didn't know, if you get a HELOC and you don't pay it, they can foreclose on you. A lot of people think that's not true. It's absolutely true. And for anybody who doesn't know what a HELOC is, it's a home equity line of credit is what that stands for. Now the next one is also just sort of true, which is investment opportunities. You can use the funds from a HELOC to invest in real estate, stocks, or other income producing investments. But here's what it says. This strategy involves risk. and it's essential to conduct thorough research and get professional advice when you need it. And this is one I actually agree with, and it's probably the only real reason that anybody should get a HELOC, in my opinion, is if you have a good investment opportunity and you're equity rich but cash poor, maybe that could be a good reason to tap some of that equity. But you better know what you're doing, because you're putting your home on the line, and if the investment doesn't work out and you bet the farm, you can lose the farm. This one is just absolutely disgusting. And that is using the HELOC for an emergency fund. They're saying that doing this can provide you peace of mind in case you have unexpected expenses. Like, what? No, guys. You need to be saving money on the side and have that in a separate bank account as an emergency fund. You don't use your home's equity as your piggy bank / emergency fund. That's how people end up losing their homes, and it's how people end up going into foreclosure and getting into massive financial trouble. Debt is a tool, and it's an instrument that can be used to help you get ahead financially in life, as they're trying to claim in this story, but only if you use it correctly. And using it as an emergency fund is just foolish, if you ask me. The next thing that they say you should use it for is education and skill development, to get a more lucrative career going or start a side business or something like that. Once again, that's just like any other type of investment that might not pay off. This is kind of in the same category, if you ask me. College has been proven to be a waste of money for a lot of people. Just go ask the people who are stuck paying off their student loans for the next 20 years and see how they feel about that. And also, if you use the money to start a business and the business doesn't work out, you're on the hook for that. And once again, you need to pay this money back or you lose your home. So this is a huge maybe, and it's definitely a risk using a HELOC for something like this. And then the last one that they cite is tax advantages depending on your jurisdiction and the specific purpose of the loan, because sometimes you can get a tax break for doing specific renovations according to what your local government wants done, and get a tax credit if you use the HELOC for that. But all this stuff, guys, all these things that they talk about here are all just risky moves. They're all things that you're using your home's equity, hoping that whatever you use the money for is going to work out and pay off, and you're going to be able to pay that off, and that you're not going to have any hardships with it. Because if you do, then it's game over. I honestly feel that 90% of people should never get one of these loans because it's just too risky. But if you feel like you have the right opportunity and you've made some investments before and made some money, then maybe you can go for it. But that's not investment advice from me. It's just my personal opinion of how I would look at it if I were you. So if you guys enjoyed this video, make sure you subscribe to the channel. And if you don't want to wait for my next video to come out, check out this one on the screen right over here, and I'll see you in the next one.